You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. Welcome back to this second episode of our Options Bootcamp Double Header, coming at you on a different day than our normal Education Wednesday. Let's just dub it Education Tuesday, because why not? My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating network upon which so many of you are binging these days. First off, if you're just listening to Bootcamp, make sure you upgrade to the full network. There's a whole bunch, to use a technical term, whole bunch of options content waiting for you out there, including Options Playbook Radio. You definitely should be listening to that if you're listening to this show. Want a little bit more education in your live option block, volatility views, you name it. It's all there. Crypto, if you like a little bit of crypto in your life, crypto rundown, and a whole bunch more. And of course, if you like what you hear, keep rating and reviewing, just like our reviewer did for this week. We've got, I like this handle, Niblets. Niblets says, we're in sell-off mode right now. Actually, no, I'm sorry. That's a question. I'm doing the wrong one. I got the wrong review here, Dan. There we go. This week's 5-star review comes from HHH. Could that be Triple H, the one and only Hunter Hearst Hemsley? Writing in to our show here. That'd be nice. Welcome, Triple H. He says, good pod. Both guys know their stuff. Sub, listen, and learn. Exclamation point. I like that. Sub, listen, and learn. I may have to borrow that, Triple H. Maybe I'll put that on a t-shirt. Sub, listen, and learn. Rinse and repeat. I like that. And also joining me to take on all comers in this Options Bootcamp mail call palooza, we've got none other than the black-hatted one himself, Mr. Dan Passarelli, the founder of Market Taker Mentoring, author of one or two or half a dozen options-oriented tomes. Mr. P, welcome back to the program. What do you think of that? Sub, listen, and learn. I like that as a subtitle for the show, sir.
I know. I love that as well, man. That's really great. Yeah, we got to hire him to be our new marketing guy.
Well, I hear Triple H not doing much in the wrestling anymore, so he might be available, Dan. Maybe we can get him. We'll see. We'll reach out to the folks at the old WWE and see what they say about lending us his services. So, yes, if you like what you hear, keep rating and reviewing. And, of course, if you want to go above and beyond, we had a great pro Q&A session just a little while ago with none other than Mr. Scott Nations. He actually loves answering all your people. He'd be in there every week, I think, if he could. So we had Tony Saliba last week. Where do you get access to all these great people and a whole bunch more? theoptionsinsider.com/pro or indeed /secret club. Don't tell anybody about that last one, though. It's just for the cool kids. As we keep on rolling, it is time to take on all comers. It is time for a mail call palooza.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Welcome to the mail call, the portion of the show where you guys take the reins, your questions, your comments. I'd like to kick things off by turning the spotlight back on you guys a little bit, having you guys answer some questions like we're doing right now. Our question of the week right now, Dan, is People are looking for safe havens in these wild markets. Which non-equity asset class looks the most attractive to you right now? Gave you 4 choices: fixed income, metals, energy, or crypto. Mr. Dan, what do you think our audience is choosing right now? Which of these looks the most attractive to them? And then B, what is your choice?
Ooh, boy. Okay. So just I'll first say what I think maybe our audience thinks. I think our audience is going to say energy. And for my answer, I would have to say, what is the time horizon? I had a little barbecue this weekend, and we were talking about crypto a little bit. One of the guys that I hang with, doesn't really know anything about it. He's like, "Hey, do you think it's a good time to get into crypto now?" And it's a tough answer. It's down immensely, and may not come back very much over the next couple of months. And his follow-up question was, well, is crypto done? Do people just now realize that it was this dumb little experiment and it's over? And that answer for sure is no, because crypto is, the way I think about it is it's less of a currency than, as far as the future of it goes, the future of it is less being a currency and more being a true veritable asset that produces something, like a tool that you would buy and maybe invest in shares of the stock. What I mean by that is there are a whole bunch of smart contracts already built on the Ethereum blockchain and, the Solana blockchain, and a couple of others. And they actually solve real world problems. And as we move more towards Web3, we're just going to see more and more and more of that. In fact, Web3 only becomes possible with blockchain technology. So in the long term, crypto's, I would say, clearly by far the best investment of all of these. But your money might just sit there, and you might even lose money over the next 3 years. But 10 years from now, I'd short the rest of those and buy crypto if that's my time horizon.
Interesting, Mr. Dan coming in on the crypto train. Let's see where our listeners are right now. By the way, listeners, if you're listening to this on demand, you have missed the poll because it will have expired. This is coming out next week for all you on-demand listeners. If you're listening live, you can go vote right now. Ad Options is the place to go. And Dan, energy is running away with it, 47.8%, followed by a tie for second place, 19.6% each for fixed income and metals. Crypto at only 13%. So no love for crypto, Mr. Dan.
No love for crypto. And you know what? That makes sense. I think the context of a question like this kind of probably implies within the next year or something like that. So, I wouldn't be dumping all my money in crypto if I had a 1-year time horizon either, but just for the long run, I love it.
Now, speaking of crypto, since you're all in on crypto, our live chat, Nichols wants to know, is Dan long any crypto here, Dan?
Yeah, I am. But
are you long Bitcoin from 60K? You can tell us.
No, I don't think I own any Bitcoin, but all the crypto I own, I'm down on. So you might consider, So I do own some. I didn't dump it at the perfect time or anything. I'm just willing to sit and buy and hold it.
Dan, you heard it here first. Hodler extraordinaire. Let's go out now. This is the one from Niblitz that I saw. I just like this handle. I was immediately drawn to this handle. Niblitz wants to know, we're in sell-off mode in SPY right now. Well, not today, as we're recording this, listeners. We are in a bit of a rally. But yes, overall, for most of this year, Niblitz, you are correct. We have been in sell-off mode in SPY. He wants to know, at what level would Dan consider getting out and going to cash? Mr. Dan, so what's your take your ball and go home moment in SPY? Niblitz wants to know.
Well, at this point, there's not. I think if you haven't done that by now, I mean, we're down just shy of 20%. I mean, at this point, even if it goes down another 10%, I mean, I feel like it's a little bit foolish to sell at this point, because if I'm holding long shares of SPY, it's only in my IRA. Like, that's not, to me, that's not a trade. That's only a very long-term investment. So I think it's my opinion, and look, this is total opinion. I'm not telling anybody what to do. And as far as long-term value investing, there's bigger experts than me out there for sure. But I mean, it's my opinion that if you didn't get into cash now, you might as well ride out the storm. And that is what I'm doing, because I'm not in cash now.
Some of you, actually, a lot of you are in cash right now and have been for a little bit. Let's just pay off this question. We mentioned it on our show recently. This was our question of the week from last week, suggested by our buddy out there, Mr. Russell Rhodes. We said, many of you are in cash looking to BTFD. That was a result of our poll from a couple of weeks ago, where nearly 40% of you said you were in cash at that moment. How low do we have to go before you pull the trigger? Quite simply, where do you plan to start buying again in the S&P 500? When we posted this a week ago, we were right around 4,000, which is pretty close to where we are right now. I'll give you the four choices first. Around here, 4,000 in the S. The next support, which is somewhere around 3,700. The pre-pandemic level, which is 3,375. Or you're in lookout below 3,000. And the results came in with 36.8% of you choosing the next support level of 3,700 is where you're going to start maybe nibbling away at the S&P again. 29.1% of you said the pre-pandemic level, 3,375. So you're in for a lot lower level. 22.2% say you're going to be around here, the 4,000 level. And 12% saying look out below 3,000. If that sounds crazy to you, remember, we just retweeted that poll we did from a couple of years ago, March 24th of 2020, where we were talking about the 2,400 level, and 73% of you were fading getting back to that level anytime soon. So just bear that in mind. We have been below that level. Dan, what are your thoughts here? Almost 37% of our audience, coincidentally enough, choosing to start buying in on the 3,700 strike, sir.
Yeah, I mean, to me, with implied volatility where it is right now as well, if you had the foresight, intelligence, or luck, whatever it is, to right now be all or mostly in cash, I feel like you'd be crazy not to start selling some puts here. I mean, not do cash secured puts with all the cash you got and scale everything in right here. But if you're not starting here, you got a chance of missing a dip and having to sell a higher strike at a lower volatility level. I don't know. To me, I mean, yeah, I would be probably putting 25% of my available cash into cash secured puts right here at this level. I mean, you're at almost a 20%. I mean, when you take into account the premium you're getting on the cash secured puts, whatever it is, just talking in general terms, you're scaling in at more than a 20% discount from the high. And granted, the high might have been too high, but this might be too low. In fact, if I'm not mistaken, an analyst from JP Morgan just said that. I believe I read that in the news today, that relative to other assets, the recession's overpriced in equities. I might be wrong on that. Don't quote me, but check it out if you're listening to. Well, I guess this is going to come out next week, right? So go back to Tuesday, May 17th morning news and verify that for yourself. There
we go. We got one more question, actually. We were hitting up the questions this week. We had a flash poll during our crypto show yesterday. It was inspired, actually, by one of our live listeners there. We put out a flash poll, and you were just talking about crypto, Dan. Which level will Bitcoin hit first, 10,000, or they suggested 100,000. We dialed it back to 60,000. And I gave you three choices, 10K, 60K, or you don't care, you're just not in crypto. And 46.5% of you chose the 10,000 level, going to hit that first before we make it back to 60K. 30.2% of you saying 60K, and about 23% of you saying you're out of crypto or you're just not in at the moment. Mr. Dan, as the crypto bull, what are your thoughts on Bitcoin, I should say, back to 10K?
Oh man, I don't know. I have a hard time seeing Bitcoin at 10K. I'm a ton less bullish on Bitcoin than I am Ethereum or Solana or whatever. Like, there's definitely likely to be. This might hasten up the flippening, going from Bitcoin to Ethereum being the king of the hill. But I do have a hard time seeing it hitting 10,000. It could certainly sell off more down to 25,000, 20,000. But if I had to say 10,000 or 60,000 first, I'm gonna say 60,000.
Dan's back on the bull train. He's spitting in your face, all of you, the 46.5% of you who chose 10K. All right, let's keep on rolling. I like this handle as well. Loquancious says, why do you guys call options trades paper? That's a good question. We throw these terms around all the time, and they're just second nature to us. But yeah, for a lot of you who are newer to options, newer to the show, they may be a bit confusing. Yes, paper is what we typically refer to as the large customer trades. If you're listening to us, not as much on this show. A lot of times we will do it, though, on like the option block where we're talking about unusual activity. Paper comes in and sells 10,000 of these or whatever the case may be. That goes back to the trading pits there, Loquancious. When the trades used to come in, they were written on paper trading cards. And when we used to put our trades up, or whatever, I sold 100, Intel out of the money calls or SPX, whatever the case may be, we used to have a stack of trading cards in our pockets. One for calls, one for puts, and yeah, buying and selling. It was all sorts of fun. And you'd write up your trades on that. Hopefully you wrote them up correctly, and then you'd hand them off to your clerk who would go process them. And then on the weekend, someone would come in, and it'd be your clerk. When I was clerking, I'd have to go do that like 6 a.m. You go in on a Saturday. It was fun. And you check out trades, because chances are in the heat of battle, you wrote something up wrong, and you wrote 50, and the other guy wrote 100, and you have to meet somewhere in the middle. So yeah, a lot of that fun. But short answer to your question is that they were all written up on paper trading cards back in the day, and that's kind of where that term comes from. Dan, anything to add there, sir?
Yeah. I was just talking about that in one of our classes. We get all these all these little just words that mean weird things. And, you always get that through history. Like, oh, geez, can I think of an example right now? Yeah. You always get these things like, why is it called that? And at some point in history, there was some reason for it. And now it's, now it's just because it is. And people don't remember what the reasons are anymore.
How about those good old days? Out trades, Dan. Remember those? Those were fun.
I know. I still want to use that in everyday language every now and then. When you see something from a different perspective from somebody, and somebody thought this was going to happen, and you thought this was going to happen, and now you're in an argument. Hey, wait a minute, we just have a little out trade here. But most people don't know what that means, even if they are in the business these days.
Yeah, for all of our listeners who are used to just hitting a button and the trade's executed in 3 microseconds, right? The notion of writing it up on a card, handing it off to somebody else like half an hour later, they take it and run it through and process it, and then coming back and checking it at the end of the day or at the end of the week to make sure they all match up. That must sound ridiculously antiquated to them, Dan. But yes, that is how it was done until not that long ago. All right, let's go out to Mackenzie, one of our pro listeners. She's usually on the crypto front. Let's see what she's got on the brain this week. Says, hey, guys, love the show as always. Well, thank you, Mackenzie. Because I know Mark has talked about all the different ways that people consume the show these days. It seems like it's available everywhere. But I wonder if he has a preferred method or platform for people to consume the show, a.k.a. the best way to listen to Options Bootcamp. Thanks. Wow. Well, you're right, Mackenzie. It is available on pretty much every freaking platform under the sun. It still cracks me up that it's up there on Audible. You can listen to, Ernest Hemingway and then us on Audible if you are so inclined. So that's a weird one for me. I haven't really processed that. Newer people are liking YouTube. I don't typically recommend it because it's not a visual show, but most people listen to YouTube really anyway, hence the rise of YouTube music. So if you want to listen to the show on YouTube, it is available there. There should be playlists for you there and everything. For me, especially for this show, because so many people are coming in who are fresh and straight up new and they want to start at the beginning. That's challenging to do in some of your more common platforms like your iTunes and others. They may limit you to how many episodes you can have access to, or you have to scroll down a long way to get access to episode 1. So if you're going to do that, if you're new to options, I will recommend usually our app. I don't talk about it a lot here on the show. I probably should. Our mobile app is available for Android and iOS. It's got everything we've ever done for the past 15 plus years in there. So if you want the one-stop shop for everything that we do and have done, that app is great. You can go in there. You can build your own playlists. You can do whatever you want. You can send us feedback directly through the app as well. And the best thing for you folks there of Options Bootcamp who are trying to go back to the beginning, it's got it all there. So you can do that on our website too. You have to scroll back a few pages to get to obviously the beginning of Options Bootcamp because this show runs for a while. So the website would be the second place. But that's not always available for everyone who are on the go or anything like that. It might be easier to just grab the app. So iOS, Android, however you like to do it, get in there. Build the playlist of whatever shows you like. If you want a Zero Dan playlist, you can do that. So it's available there. You can build it of shows you'll like. You have feedback. You get notified of new episodes. So I would probably recommend for my ideal listening scenario for this show in particular, I think the app is a great way to go because you can start at the beginning. It's really easy and just go from there and listen to your heart's content. Other platforms, it's a little bit more difficult. You may have to start somewhere in the middle and that could confuse you. All right. What do we got going on here? We've got Christian. Christian, another question for Dan. Christian says, is Dan still rating, or did that end along with the meme stock frenzy? What are the basic requirements for a name to make it worthy of rating? Does it just have to be cheap and have options on it? So, Dan, A, are you still rating? B, what are the basic requirements that make it worthy of rating? And C, does it just have to be cheap and have options?
No, well, there's a methodology to it. Like, to have a trading system, the goal is not just to say, woohoo, go and buy this crap, hee-haw. It has to meet certain criteria. And yeah, I mean, it's still working out really, really nice. ATR is a hot play that I've got position on as of right now, and it's up. AMC is one that's working spectacularly. I just closed half of it at a little over 100% while we were on this podcast. I think that was the last episode that we recorded earlier today. So yeah, I mean, these things are still in play and it's a great way to play it. Especially there's only a small amount of correlation to the direction of a market. Like some of these work out really nicely, even if the market's down. When the market goes up and everybody has that, good spirit back, these can be really great plays.
So yes, the answer is it just has to be cheap and has options on it, and then Dan will rate it. That's pretty much the answer there. If it's $2.25 and has a call available, chances are Dan has rated it in the past. Correct, sir? That's
it. Exactly. Yeah, you got to figure it out.
If you want to know more, of course, hit him up over there in the land of MTM. This is an interesting one. This actually came in, I believe, last week during our pro Q&A with Tony Saliba. So he wasn't a pro member, but this was so right up as Tony's alley. I actually gave Tony a chance to answer this because he is kind of the king of butterflies. So if you want to hear his answer, Aaron, check out the pro over there, theoptionsider.com/pro, because Tony has traded butterflies for decades. He's kind of like Mr. Butterfly. So I wanted to give him a crack at this because I knew he would love it. But you wrote it into this show. He says, this is from Aaron Robb, by the way. He says, hello, I love your shows. He says, Options Bootcamp and Twifo are my favorite. Got to get some love for Twifo. This Week in Futures Options. If you're not checking that one out, listeners, and you're intrigued by, I don't know, nat gas, crude oil, equities are in there as well, ags, metals, rates, whatever floats your boat. This Week in Futures Options is kind of the only game in town in terms of shows that are talking about futures options. For some reason, it is not a very much discussed aspect or element of the marketplace out there. So check it out if you are intrigued. You can join Aaron listening to Twifo. He says, I've learned so much from you guys over the years. Can you explain how to use butterflies appropriately? Should I be waiting until it comes right down to expiration or closing out earlier? And what kind of profit target do you see professional traders using? Finally, I fear I'm setting my wings too shallow. Is there any rule of thumb around how wide to set the width of the butterfly's wings? take SPY, for example. Is $5 wide on either side too slim? Thank you very much. I think you probably can both agree, Dan, that $5 in SPY is probably not enough room to let your butterfly soar, to beat up the metaphor there. But Dan, what do you have to say for Aaron? I know you like yourself a good time spread, but you like a bit of a butterfly as well. He wants to know, how should he use butterflies appropriately? When should he close them out? And is he setting them too shallow, in particular $5 wide on SPY?
Well, yeah, I mean, there's a couple of things here. First of all, $5 on SPY is like 1.25%. Not a very big range. But, you know, the time horizon has a lot to do with that, too. If it's a one-day butterfly, I mean, still that's pretty tight range, but you can take your chances with it. I mean, if it's like a 2-week butterfly, like that's a terrible trade. One thing, so yeah, you'd want to have your break-even set. I mean, look, a really easy way to think about this is look at the time horizon you're considering and look at, like, just look to the left at the chart. How much does it typically move in that time period, and set your break-evens accordingly. Now, that said, butterflies do tend to work best with less than 2 weeks until expiration, probably less than 1 week, probably about 1 week until expiration. Because if you go out farther than 2 weeks, your theta is like nothing. And that's what you're trying to make money on. And so basically, like, you don't make almost any money every day, but you still own the risk of movement, you know, and if it moves too much, then you're screwed. So it's like all risk and no reward until you get down under about 2 weeks. Then the theta is a lot higher. And so then you're being compensated for your risk. So there's a lot to unpack there, but.
Yes. That's it's so attractive for people. They look at butterflies and they start going out a month or two like, oh, these are so much cheaper. Well, there's a reason. They're not going to do anything for quite some time. So Dan is correct. Definitely a couple of weeks inside a month is usually the sweet spot for a lot of options, or I should say butterflies. You go much farther than that, you're going to be waiting. I mean, you can get the move you want and you're still going to be sitting there twiddling your thumbs because you need that decay to come out of that butterfly for it to widen out to get your max profit. And so if you have a 2-month butterfly and the move happens tomorrow, you got to sit there. Nothing you can really do until that decay comes out of it and that spread widens out. And that can be very frustrating for a lot of people. They were right, just wrong on the time frame. So definitely keep your butterflies near term. In terms of the width, yeah, $5 is not wide enough. You want a rule of thumb, a great rule of thumb, one we talked about here, one I know Brian talks about all the time on OPR as well. If you're looking how wide to set the wings of your butterfly, look at the straddle. Go out to however long you're looking. If you're looking at 2 weeks out, look at the 2-week straddle, whatever the case may be. And that'll give you a good rule of thumb for how wide to set your wings, because that's what the market is expecting in terms of movement. So in that case, however far you're looking out in SPY, look at the straddle there. And that's a good starting point for how wide you should be setting your wings. So hope that helps you out a little bit there, Aaron. Butterflies can be tricky. They have a lot of moving parts. Taking them off, you mentioned that is a whole course in and of itself, taking off your butterflies. You could leg into many other things from the butterfly tournament to verticals or whatever the case may be. So there's a lot of different ways to take butterflies off as well. It isn't always just put them on as a unit, take them off as a unit. We have touched on that in the archives in the past as well. So I encourage you to go check those out. Use the aforementioned app to check those out. That is a great way to do it. If you want to hear Tony Saliba's answer to this question, which was pretty lengthy and involved, check out theoptionsinsider.com/pro. Get access to that pro Q&A, options oddities, everything else we're doing over there. Yeah, he loved this question, so I cheated and let you have a question on the pro there, Aaron. Hopefully you enjoy it. All right, Mr. Dan, another week, another options boot camp in the books. But before we go, Mr. Dan, if folks have questions on any of this stuff, going into cash in the indexes, trading flies, from before last week's, in quotes, episode that we just did half an hour ago about time spreads, if they have a question about that, maybe about crypto, where should they go? What should they do?
Yeah, make your way on over to markettaker.com. Market is in stock market. Taker is in take what's rightfully yours, 2 T's in a row. And your best bet really is to join our mailing list, because I send out a complimentary video every single day to the folks on our email list And it's either, thoughts about the market or, like what's trading or some trade ideas or just some like really solid education. And it's just I do it because I want to help our flock. And I think it's a great way for anyone to really ramp up their options knowledge really fast.
Our flock, I like it. So you consider yourself a priest then, do you?
Yeah, or a bird.
Or a shepherd, yes. Many ways that metaphor works. But there you go. Become part of Dan's flock. Check him out over there at Market Taker, 2 T's in a row.com is the place to go. We got to get on out of here. Hopefully all you pro folks enjoyed your triple header today. You had a great pro Q&A with Scott Nations, followed back-to-back by Dan and myself, putting up 2 great episodes of Options Bootcamp. Everybody on the on-demand, you have to wait an extra week to get this second episode in your ear holes. Remember, if you just listen to the boot camp, you're missing out, so make sure you get the full network. And then we'll see you back here next week, another episode of Options Boot Camp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.